Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I just wanted to do a very quick video just to kind of go over some of the companies that have reported their earnings in the last few days. As you know, there is the earnings season, and this sometimes means this might give us an opportunity as long-term investors to look at the companies that we own and see if there is an opportunity for us to buy more, or if it's basically doom and gloom and just get out basically. And that's exactly what we're going to do today. So we're going to look at some of the companies that I've reported that I own in this portfolio, and then I will tell you exactly what I'm going to do with each one of them. Some of the companies that I do not own that I've reported that will potentially might be interested in the long run. Also, I'm going to talk about those. But yeah, so and it's very interesting. 3M has also reported this morning, and it's actually, last time I checked, was over double digits up. So yeah, it's coming back. It's coming back stronger after I sold it. I think I lost about £1,000 on that company. I haven't not lost that money, I'll be honest with you, because I've reinvested that money in other companies that have gone up since so much. So alhamdulillah, it's not all lost. Anyway, the portfolio is doing really good today. As you can see, we are now over £106,000. The highest it's been since the beginning, since I started this, I think it was 107. So it's heading towards that again. We're having a good day today in the markets. I think a lot of you are feeling good about the markets all of a sudden. But yeah, it's interesting how our mindset changed very quickly. I bet a lot of you are buying stocks today rather than just thinking the way I normally think. I see a green day and I'm like, I'm not touching the stock market today. I'm not buying anything, because there will be opportunity tomorrow or next day and the day after, whatever. So, and there will be red days. Trust me, don't worry about that. There will be red days, and I love to buy stocks when I feel like they've gone down quite a bit. Anyway, let's get started with the first stock that we want to talk about today, and that's UPS. So UPS reported at the beginning of the week. Since the beginning of the week, let's see how much they're down. They're down about 11%. A year to date, they're down about 17%, and for the 1 year, over 30%. Okay, and this is interesting because if you think about it, this is one of the companies that I have had in my portfolio quite some time, and it's done nothing for me since I actually bought it. It's dividend growth company, very well-known company, and so on. But what's happened? So I want to just touch on some of the things they've reported and just kind of give you the bigger picture, and then I'll tell you exactly what I'm doing. Okay, as you can see here, they've reported and they missed both top line and bottom line. So the EPS was a miss by 20 cents and the revenue was missed by 440 million. Now, in terms of what's happened to the company, for me, this is the main part. Okay, this is the main reason why. So the labor cost is basically what's killing this company. So at the beginning of the year, around the beginning of the year this year, they had to issue basically new labor costs tied to a new union contracts, okay, with its drivers, and shift by consumers to cheap shipping options. These are the two main reasons, especially with the new union contract. Okay, so all their now drivers are of course part of this union, and they have to now basically pay extra, if you like, and that's what's hurting the company. And this is one of those things, and I think they mentioned here, this is one of those things that they have to pay it up front, if you like. So they're taking a hit now, but it will bounce back. So the CEO actually talked about the front loading of the costs associated with the labor contract. This caused the first half of 2024 earnings to be down significantly, and second half earnings to return to basically growth. So the first half of the year, we can't expect much from this company, but in the long run, what is happening to this company? Now, we know they missed it, okay, the earnings and so on for the first this quarter, but what is happening? Remember, this is Q2, so we still got 2 more to report before the end of the year. Now, I just want to quickly go over, just if I can go back, guys, to the earnings expectations. Okay, so it's been a few days. I want to see, sometimes I don't like reporting straight away after company has just reported, so we wait for a few days to see what the estimates look like after the dust has settled. And look at this year, okay, we are in a bit of a decline. The earnings are declining about 13%, but the following year almost 20%. The year after, about 16%. Remember, this is just estimates, but there are a lot of analysts that do agree on this. Okay, so double digits growth for in 2025 and 2026. Now, let me just tell you this. Wall Street do not like, basically, they're not long-term investors. A lot of these people, they just worry about quarter to quarter. And some of them are traders, so they trade in and out of stocks. They hype stocks, they go to the moon, and then they sell it, and then they buy the next shining thing. If you're a long-term investor, why do you actually care what has happened just this quarter, okay, or this year? My trajectory is, my plan is, for my time horizon is, I'm going to hold on to this company for the next 5 years. Why do I really care what happens just this year? As long as the fundamentals of the business, so the business is not falling apart, they're not, making, they're not in the long run, they're not actually a terrible business. They're not going out of business. Nothing bad is happening. The management are still doing a good job. They're returning good money to shareholders and so on. The long-term investment, return on your investment is still intact. Then why do we really have to worry about quarter to quarter what happens? So they might be reporting about 3% in Q3, okay, and then in Q4 about 4%, but then after that 27, okay, every single next 3 quarters, that's what they're reporting, and then up to that 7%, and then after that 10%. So there's a lot of analysts looking at this quarter to quarter, but when you look at the annualized, I have nothing to worry about. Okay, when it comes to the revenue, this is what I expect from this company, about 4, 5, 6, 7, 8%, and that's basically what they're expecting moving forward. This year it might be a bit of a flat, but then a year after that it will actually come back. So the moral of this story is, I'm not really worried about this company. It's right now, yes, it's down quite a lot, and what am I doing? I'm dollar cost averaging, and I'm buying more of this company. So I'll share that with you guys in a second, but as you can see here, there's about 13 people that are saying it's a strong buy, 2 buys, 14 holds, 1 sell and 1 strong sell, and it's upside. It has an upside of basically 15%. $149 per share is where the price, the way they think the price should be. Right now I'm down £1,500, but this is a paper money. I'm not selling this company anytime soon. I like the business model, I like the company, I like what they represent, I like the future moving forward. This for me is basically 5 to 10 year hold. I've had it for I think about 2 years now, maximum 3, maybe 2.5 years. So I've got a long way to go, and I'm going to leave it alone, and I'm going to keep dollar cost averaging. This I might be down this, but when it bounces back, if InshaAllah, it will be almost 6,500. It will be one of my biggest holdings. Right now I own 50 shares, and just to prove it to you, the day that it went down so much, I actually bought more. Let me just quickly show you. So on that day, I think it was the day they were reported, I just bought 1.2 shares of the company on that day. No, actually I bought more. I bought basically almost 2 shares on that day. Right now I own 50 shares of the company. I'm going to basically dollar cost average, and I'm going to continue holding on to it, inshallah, moving forward. And as you can see here, it's actually what 6th, 7th best, basically biggest holding that I have in this portfolio. Stay tuned for that at the end. I'm going to do a quick, I'm going to show you the entire portfolio in a second. The next one that we're going to talk about very, very briefly is AstraZeneca. They reported and they beat top line, bottom line, nothing to worry about. Everything looks basically what I expected from the company. It was down for a bit, which I didn't understand, and I tried to find out why, but it doesn't look like there is anything out there to suggest the reason why this company was down. And as you can see, is expecting double-digit growth, and when it comes to revenue, it's actually expecting double-digit growth this year, and the next year about 7%, which is absolutely fine. In terms of ratings, okay, we are on, what are we, 7 strong buys, 4 buys, 2 holds, and as you can see here, about 12% upside, $88 per share is where they think the price should be. And looking at this stock, I think for this is down about, just this week is about down 1%. A year to date, they were about 17%, and for the 1 year about 13%, which is nice. So initially when I bought it, I was down quite a bit, but right now I'm up about 11%, £500, which is quite decent. I own 40 shares of this company. Now, these are the only 2 companies I want to talk about today that I actually own in the portfolio. Just quickly, briefly talk about a couple of other companies. Texas Instrument reported, and as you can see, they beat both top line. So the top line was actually in line with what was expected, but it was down year over year, and bottom line, it was actually a beat, which is nice. And they basically kind of reiterated what they basically said initially. So nothing to worry about. In fact, I'm just want to quickly show you moving forward the expectations for this company, and in this year is a decline. After that, it's double digits every single year. Again, same thing for revenue. After that is double digit. It kind of reminds me where Qualcomm was about a couple of years ago. But yeah, nothing huge really to worry about when it comes to the company. This one, it was down so much yesterday. I think it was down about 10% or so. Let me just actually look. Yeah, about 10% down yesterday when it reported. And the reason it was because it was actually a missed both top and bottom line, which is crazy for this company, because normally they're not like that at all. So it will be interesting to see what has happened. I want to dig deeper. I want to find out a bit more information. But according to Morningstar, it's still overvalued. But these guys are saying actually, no, it's not. It's actually right now about 12% upside from where we are, $223 per share. But according to Morningstar, it's always been kind of overvalued, and I genuinely think it is. I would love to see it in $150 per share. If it gets to that stage, I potentially will be adding to the portfolio. Another one that reported is Thermo Fisher Scientific, and as you can see, it's actually up about 2%. Looking at what they've reported, okay, nothing to worry about. Both top line and bottom line, it was actually a B. So interesting company. I really like the company. It was down a lot when we talked about it a few months ago, but I've never actually initiated a new position because I do own quite a bit of pharmaceutical companies, and I didn't want to overload that one. Just to kind of show you what the expectations are for this company. Yeah, double digits basically for the next couple of years, but this year it looks like it's flat. And then same goes more or less for the revenue, about 6-7% revenue growth every single year moving forward. And finally, the company that I want to talk about is AbbVie. They were also reported this week. I can't remember when they reported actually. Yeah, they reported yesterday morning. So another company that I've been interested for quite some time, and as you can see here, if we go to the earnings side of things, as you can see, they missed it by 1 cent, but they beat actually the revenue side of things. And again, it's one of those companies that have gone up so much in my opinion, so I wouldn't really touch it, although it says it's actually 10 strong buys, 9 buys, and whatever, 10 holes there. It's a flat right now. I would definitely love to see this company come down at least 15-20%. Then I will probably be interested. And moving forward in terms of earnings, okay, if we look at this, and if we look at the estimates here, that is, you can see double-digit growth every single year. Of course, one of their big drugs, Humira, is actually now out of patent. So that is interesting to basically it will be interesting to see what happens with the company in the next couple of years. But there you have it. That's the companies that I want to talk about today. Most importantly for me is UPS and AstraZeneca. I like both companies. I'm going to hold on to them. This one I'm down, of course, up, and this one I'm down quite a bit. And like I said at the beginning, please, no matter what happens, do not sell your stocks just because they're down 1 quarter. If the business has completely changed, then of course it is important to actually, of course, look into it. But right now, do not just get rid of your stocks just because they are down or whatever. If the fundamentals of the business has changed, like 3M, okay, 3M for me, a year basically for the 1 year, as you can see, 33% up, 34% year to date, in terms of last 6 months, 52% up, which is absolutely ridiculous. Now the issue is still there, okay, they still have to fight. Of course, they beat top line, bottom line, whatever they've done this week, okay, but that does not mean anything to me anymore. But the reason I say that is because there is a legal basic situation still ongoing. Until that's completely cleared and the company's out of the woods, then I will not be touching this at all. Despite the excellent dividends that they pay, I think they look at this dividend safety. They cut the dividend recently, of course. I've been saying that for quite some time. Still, it's attractive actually, about over 4% in comparison to what it was before. So as you can see, they did cut. So yeah, despite being really basically in a good position right now and going up and up, I will not touch it. I do have other companies that are better than that. Companies like Cummins, for example, that has been in my portfolio quite some time, up about 35%. So I'd rather actually buy more of these companies that actually believe, that have no legal situations, whatever, than actually buy 3M. Anyway, I hope you enjoyed this type of content. I just want to kind of give you a quick overview of some of the companies and what they've reported. I've got a lot more videos coming up, inshallah. If you have not joined us in the Patreon account, please do so. It definitely helps the channel. Have a wonderful day. Assalamu Alaikum.